The first atomic bomb was dropped on Hiroshima.
Over humanity!
The fires of frustration and discord are burning in every
Let us
city.
not forget for a moment the toils and efforts that lie ahead.
They say that those who forget their history are condemned to repeat it. This is the History Lessons Podcast with certified financial planning practitioner Patrick Huey, author of History Lessons for the Modern Investor, and your guide to financial wisdom in the past, present, and future. You ready? Good. Let's get historical.
You've been watching the Winter Olympics in Milan, Cortina. You've basically been watching people try not to fall down in the most spectacular ways possible. Skiers launch themselves off of cliffs, snowboarders pretend gravity is optional, and figure skaters spin like they've never heard of ankles. From the couch, it all looks effortless. But every one of those runs is the same basic challenge. Stay on your feet, don't overcorrect, stick more landings than you blow. Well, right now, the economy looks a lot like one of those Olympic courses. Yeah, there are icy patches. Visibility, it's not perfect. And some turns feel tighter than we'd like. But if you zoom out from the slow-mo replays and the dramatic commentary, you see something a little bit simpler. It's still moving forward. It's still upright. It's still getting to the bottom of the hill, mostly in one piece. That's the part investors tend to forget. We see one wobble in the data and suddenly it's sell everything, we've crashed. Or we see one perfect jump and go, I'm all in. What could possibly go wrong? Olympians don't throw out their entire routine or their entire career because they bobble one landing. They finish the program that they trained for. And your financial life should work the same way. Have a clear run. Know where the big turns are, retirement, college, big purchases, but build in some margin for error. And accept that a few shaky moments don't mean you failed the event. The goal isn't a perfect 10 every single quarter. It's to stay on your feet all the way down the mountain. After the break, I'll be back with this week's history lesson for the modern investor.
This episode is sponsored by Victory Independent Planning. At VIP, our mission is simple. Live well, do good. We build strong relationships with good people and help them turn money into what really matters. Retiring without worry, traveling more, supporting family, or funding the causes and projects they care about most. Based in Naples, Florida, and Portland, Oregon, we serve clients nationwide with comprehensive fiduciary advice, retirement income planning, custom investment portfolios, tax strategy, healthcare and Medicare decisions, and estate and legacy planning, all carefully organized around your unique goals. If you're ready for a plan that puts your best interests first, visit victoryindependentplanning.com and schedule your VIP consultation.
Ring the bell because on February 11th, 1990, Buster Douglas knocked out Iron Mike Tyson. It's when impossible got repriced in one night. February 11th, 1990, Tokyo. The boxing world showed up expecting no less than a formality. Mike Tyson was 37-0 and the undisputed heavyweight champion, and so feared that most opponents, they looked beaten during the ring walk. Odds makers made his challenger, James Buster Douglas, a 42-1 underdog. Now, some sportsbooks didn't even bother taking that bet. Douglas had lost before, had personal struggles, and he entered the fight dealing with the recent death of his mother. The script seemed written. Tyson, early knockout, and lets everybody move on. Next challenger, same story. Instead, in the 10th round, Douglas floored Tyson with an uppercut and a combination that scattered the champ's mouthpiece across the canvas. The referee counted 10, and the sporting world short-circuited. Commentators scrambled for words, and in one night, the surest thing in boxing had been repriced from invincible to at least slightly vulnerable, and an underdog many had written off rewrote the narrative. Now, Tyson once summed up nights like that with a line that applies to a lot more than boxing. He said, everybody has a plan until they get punched in the mouth. For individual investors and retirees, that night in Tokyo is more than a sports upset. It's a vivid picture of overconfidence, mispriced risk, narratives gone wild, and how quickly everyone knows can become, man, no one saw that coming. Here then are 4 lessons for the modern investor from Buster Douglas versus Mike Tyson. First of all, don't confuse dominance with safety. Tyson's winning streak and aura made people treat his fights as foregone conclusions. And in markets, we do the same thing, especially with dominant companies or hot sectors or long bull markets. This stock always goes up, or this strategy has never failed. This asset is the new sure thing. Okay. History never gets tired of humbling that mindset. Enron was a market darling. Tech in 1999 was unstoppable. Housing in '06 was, it's safe, it's housing. Of course, until they weren't. A good retirement plan does not assume any single stock, sector, or strategy is untouchable. Diversification exists precisely because even the champs get punched in the face occasionally. Second, underdogs happen more often than we pretend. Before that fight, Douglas was treated as a tune-up, not a threat. But he had size, he had some skill, he had a good jab, and he was deeply motivated. In investing, underdogs show up as unfashionable asset classes like boring value stocks, neglected international markets, or sectors everyone hates because they've, underperformed recently. Most investors chase whatever has Tyson-like momentum, and they ignore what's quietly improving. But over a full retirement horizon, being willing to own some Buster Douglases in your portfolio, those areas that are out of favor but fundamentally sound can be a powerful source of both return and resilience. Third, everyone does have a plan, but preparation still beats swagger. Tyson's famous line that everybody has a plan until they get punched in the mouth is a pretty good summary of most untested financial plans. Tyson came into the fight undertrained, distracted, and reportedly treating Douglas as a mere afterthought. Douglas, by contrast, had a clear strategy, better conditioning, and reason to dig deep. Many investors give their biggest final fights, retirement, college funding, tax planning, the least structured preparation. No written goals, no spending plan, no risk assessment, and a portfolio built from hunches and headlines. Overconfidence, meaning I'll figure it out later, plus a lack of preparation is how routine market volatility turns into the proverbial knockout. A written plan, a real fight strategy for your money won't prevent every punch, but it makes you far less likely to be stunned by one that you should have seen coming. Finally, the real test is what you do after the surprise. The most interesting part of the Douglas Tyson story isn't just the upset, it's what happened next. Tyson never fully recovered his invincible aura. Douglas, after the pinnacle, struggled with expectations and conditioning. Markets will hand you similar surprises, sudden corrections, unexpected windfalls, job changes, health events. The question isn't whether those shocks happen, because they will. It's what you do next. Do you chase losses with more risky bets? Do you permanently ratchet up your lifestyle after a few good years? Or do you go back to your corner, reassess, and stick to a process that fits your long-term goals and risk capacity. Here's my final thought this week. On paper, Buster Douglas versus Mike Tyson was a complete mismatch, right up until the moment it wasn't. Odds, narratives, and past performance all pointed one way. Reality went another. Now, your financial life will have its Tokyo drifts, where something you thought was certain, but suddenly isn't. The antidote isn't to predict every single upset. It's to build a plan that doesn't depend on any one favorite staying undefeated all time. Spread your bets. Respect the risks. Prepare on purpose. And remember Tyson's line, the next time markets throw you a punch. Everybody has a plan. Your job is to have a plan sturdy enough and flexible enough that you're still standing at the final bell.